Money with Santosh Sirur.
Hello and welcome to the Sound of Money. Now, I'm Santosh Sirur and who've been bringing you the Sound of Money, especially through my FM radio shows. And then we went on for the podcast, so very few of those episodes. But now, from today, we get the Sound of Money on the video version. And Sound of Money will really focus on business and finance, macroeconomics. Also plan to include a lot of personal finance, how to go about with investments. So a whole lot of it looking at the Indian economy and the world through the business lens. So that's what is Sound of Money all about. And today on my show, I have a very, very special guest and who's seen through the Indian economy, its ups and downs. And I'm very privileged to have Madan Sabnavis on my show. Madan, very warm welcome to the Sound of Money.
Thanks a lot, Santosh.
Yeah, so Madan, you've been a career corporate economist with almost 30 plus years into development banking, commercial banking, and also you've been associated with commodity exchange, and of course, of late you've been with a credit rating agency. Madan, you're a very familiar face on television business shows, and of course, he has also been a lot of. I remember you writing for a lot of business newspapers. And of course, he currently is working and he's a senior economist with Care Ratings. And he has also authored 4 books and quite interesting names. In fact, one of them is Economics of India, How to Fool All the People All Times. I'm sure I'm going to get to know a lot more about that, Madan. And of course, also books like Economic Quirks and also Macroeconomics Demystified. But recently, he's published his, the 4th book, which is all about Indian banking system, and it's hits and misses. And we're going to got to know a lot more about that from Madan in this episode. You've also been on SEBI's committees and also been the chairman and co-chair of IMC. And I also read about BCCI. So I hope it's nothing to do with the cricket one, right?
No, nothing to do with cricket. I'm interested in cricket, but that's Bombay Chamber of Commerce and Industry.
Perfect. Yeah, I thought so. So Madan Sabnavis, as I mentioned, is currently the chief economist with Care Ratings. So Madan, let's talk about your book itself, the recent book, Hits and Misses. I gather it really covers the broad span of 25 plus years of Indian banking. And I think it starts from 1991, which was a watershed year, I guess. So maybe tell us a little more about that.
Yeah, absolutely. I think what I realized was that ever since we had financial sector reforms in 91, 92, and I think that originated with the Narasimham Committee report. And I think that is one of the greatest reports I've come across because this was done in 91, 92. And at that particular point of time, we had no access to the internet. And I think what Mr. Narasimham and his committee members had done, the kind of foresight which they had, is fairly amazing because even the issues which we talk of today, which are not resolved in banking, actually have already had the solutions which were mentioned by Narasimham in this particular report. So what I thought was that let's look at how banking has progressed since 91, 92. So from primarily a public sector oriented kind of banking system to something which is more diversified, which have more active foreign banks, and more importantly, the new private banks. What kind of changes have taken place in the banking architecture since 91, 92? So that approximately comes around 2.5 decades if you bring it to around 1819, for which most of the data has been presented. So it was a more kind of a trend analysis, looking at data to see what kind of changes have taken place. And a lot of impressionistic views which you and I might have had, it's probably not what is really there. For example, if you look at the public sector banks, we normally think that they're lazy banks. They really don't do much. You would normally think of that clerk sitting there having his tea, making you wait in long lines. But actually things have really changed a lot. And I think the public sector banks' performance has been comparable with that of private sector banks in terms of their operations, the way in which they've adapted to technology. But then I think there's a second part of the book where I've actually picked up certain controversies, picked up lots of issues which come up in banking off and on, especially in the last 5 years. And then you really started raising these questions about saying that are we actually going in the right direction? What is really the problem with public sector banks? And this is where I actually take on something which probably not too many people have been very open about, where everybody would agree with it, that is just too much of government interference. Yeah. There's nothing wrong with public sector banks, there's nothing wrong with people who are working there. They're as good as those who are working elsewhere. But essentially, it's the ownership problem which creates problems. So I picked up issues like the ownership of public sector banks, capitalization of banks, In fact, an interesting chapter is also on the compensation which is paid to bankers. Now, we normally think that the private sector salaries, but on an average basis, actually the cost for the public sector banks is actually higher. That's one part of it. And the second part is, of course, if you look at a very senior level, you look at the CMD levels, there's a wide variation in terms of what a private sector banker gets and what a public sector banker gets. So I think these are the kind of issues which I've taken on. And of course, as an economist, somebody could have probably blamed me by saying I'm not taking a firm stance because I provide views on both sides. That's what economists are famous for, saying that they're two-handed economists. Everybody says on one hand, on the other hand. Yeah. But I think that's the right way to present the views, that it's not as clear as black and white. You give the arguments for, against, and probably I do pitch in saying that, okay, what I think should be the right thing, but it's left for the reader actually to take a call on where he or she feels the right answer lies.
Yeah. Interesting one. Madan, but you touched upon this on the government interference, and especially, you really can't separate banking or finance or an Indian economy from the political quote unquote interference. It is a reality, and it's a stark reality, and we've got to face it. So maybe your comments on this, how does it really pan out in the coming years, especially with privatization and the challenges ahead?
No, in fact, Santosh, what you raised is the right thing, because I think political economy cannot be separated from economics. So if you look at public sector banks, they're owned by the government. So the government uses the banks to run its own agenda. When I say its own agenda, is any kind of social programs, any kind of economic programs. Like, for example, let's look at Jan Dhan. Okay, Jan Dhan is where everybody's given access to open a deposit account. There's no cost for them, but there's a cost for the bank. And the basic idea was to make sure that when we go into direct benefit transfer, that particular program can be implemented. It's a high cost as far as the bank is concerned. It doesn't get any return on it. However, they are forced to do it. But they are forced to do it because the banks are owned by the government. And I think as long as the government owns the bank, you can actually say, I am the owner, I have a right to run it the way I want to. But that's one of the reasons as to why we say that even though we're talking a lot of privatization, we're talking of divestment of public banks, in my mind, I think that's never really going to happen in a definite way. When I say definite way, I think the government is okay to saying I'll reduce the stake from 100% to 80%, 70%, but will I actually go below 50% and say that let 51% be owned by a private party? That will never happen because of the political economy which is concerned. Yeah. So this actually leads to other problems of saying that if I'm running these banks, I own the banks, I'm responsible for them, then I also need to provide capital. So the contradiction really comes saying that some of these banks have made huge losses because you've done lending which you should not have ideally done. Your losses mean that your P&L gets wiped out, your net worth gets eroded, so therefore you need to capitalize them. And then all of us as critics, economists, we say that, look, we should not be, where's the money coming from? The government doesn't have the money, but the government has to provide it because I'm the owner of these banks.
Absolutely.
Otherwise, is what we were talking of, we need to let it go to the market. But if I have to let them go to the market, people will give a good valuation if I'm sure that the bank is not being going to be driven by a government agenda, by a political agenda, and that's not two things which will separate. So I think this is one of the problems which will continue with us, and it's something which we'll have to face. So even though in the ideal situation, we'll say that I'd like to have the public sector banks becoming private sector banks, but to my mind, I think it's a long way off because a lot of our political agenda is being done through the public sector banks.
Yeah, absolutely. But Madan, I absolutely agree with you. Arguably, it's not an easy task to really separate. And if you look at it, look at Jan Dhan, right? I mean, when we went in for Jan Dhan and, millions and millions of accounts, especially, of course, the intent was, direct transfer. But if you look at it in hindsight, it was a fantastic thing because now with the pandemic, there was a lot of, e-banking possible, right? Which otherwise would have been a nightmare. Imagine, even then you have people still walking into a branch, but thanks to Jan Dhan, you have these accounts open, at least, especially if you look at, I can come across my own helper, right? In India, where, it becomes much easier to credit the account of that person who possibly otherwise may not have access or may not have had access to a simple basic banking system.
So that's true, but Santosh, the thing is that finally at the end of the day, a bank is being run on commercial lines. Yeah. Because we are judging a public sector bank on saying that what kind of profits are you making? Because the profits is going to affect your valuation in the market. Now, these are all great ideas which have to be done, but ideally there should be the funding for these accounts should have been coming from the budget. But what we do is, because you talk to a public sector banker, they'll say, look, I have to open so many accounts. I get zero revenue for it because if you look at the balances, they remain virtually stagnant. You have a certain amount of money coming maybe from your Nariga program, your daily wage comes into it, and I'm spending it. So it's very good from the point of view of the deposit holder. So from the point of view of society, it's very good. It's a great idea as far as the government is concerned, as far as the people are concerned. But from a commercial entity point of view, I think it's not a good idea because there's a cost which is being involved. You have to have a certain number of staff which is tracking these accounts. You don't earn any kind of money on these accounts because they're very too small. And the money just comes in and goes in. So if you look at the average increase in these balances, it's really been very, very insignificant.
Okay.
But that's the crux of it, that it's a very good idea, it's a very good social program, but however, asking the commercial entity to do it is not really the right thing to do it. That's why the private sector banks have kept away from it.
Yeah, absolutely. I also want to touch on a very key, and especially post-pandemic. And March, we were really, I think, it was a stark reality, and that's the NPA. But for some reasons, the NPAs of the banks that now they are reporting are really minimalistic numbers. And is that a reality, or the ground realities are different? What's your take?
Actually, ever since we had the lockdown which was imposed, I think the Reserve Bank of India, of course, in consultation with the government, came up with certain very, very, I would say, proactive measures when it came to recognizing your NPAs. One is there was a moratorium which was given for 3 months, and subsequently they increased it by another 3 months right up to August.
Yeah.
And I think the RBI's latest financial stability report shows that around 50% of your overall credit outstanding was actually under the moratorium in the month of August. Now, besides that, we have seen special dispensation being given to the SMEs in terms of loan restructuring taking place. There's a one-time restructuring program which is also on. This was under the auspices of Mr. K.V. Kamath Committee. I believe not too many companies have qualified for it or have opted for it, but that's another option which is there for them. But I think the picture we're getting today is that the NPA levels have come down. So if you look at the NPA levels, which at one point of time around 14-15%, on the threshold of 1920, we had come down to something in the region of around 8.5%. I think the last few numbers we have is as of December, maybe as of September was around 7.5 to 8%. Maybe in December we will be in the same region of 7.5, 8%. But I think the important part is that a lot of these have not been recognized because of the special dispensation given.
Mm-hmm. Okay.
So the moment this dispensation is removed, so in fact, I would just like to highlight some interesting point made by the Economic Survey, which was released on Friday, where the Chief Economic Advisor has said that we need to go back to an AQR, an asset quality recognition exercise to be done the moment we stop with all these dispensations which have been given. But that's when the true picture, the true number of NPAs will get revealed. So my sense is that the numbers will definitely be very much higher.
Yeah.
I would say it would be more in the region of around 11.5 to 12%. If I go back to the financial stability report of the RBI, which came out in the beginning of January, they have given different scenarios, stress scenarios, and they're really talking of it lying between somewhere close to from 13% to around 14.5 to 15%. So definitely, I think the numbers we see today are not the ones which to be taken at face value, because it's going to be much higher, maybe 50, 60% higher than what is being revealed today. That is an 8% ratio could be moving towards 12, 13, 14%, maybe 1 year down the line.
Okay, so that's why exactly the RBI did caution a few months back about these NPAs. In fact, even then the stock market seemed to be in a different level altogether. So maybe if we could just touch on this correlation, or if there is any correlation, if any, between the stock markets and the banking industry.
No, I think as analysts, we always try to see if there is any sense in what's happening to the stock market. And honestly, Santosh, while over a longer period of time, 15, 20 years time, if you do the analysis, you will see that generally when the economy does well, the financial system does well, the NPAs are low, the stock markets tend to do well also. And the converse, of course, also holds. But if you're looking at it on a day-to-day basis or even on a monthly basis or whatever has happened since the pandemic, I think that stock markets are being driven primarily by what's happening on the pandemic front. Any news about the vaccination being found, the vaccination being implemented, permission being given for certain companies to roll out the vaccine, I think that's had a more positive impact on the stock market, because this is where, and it's happening globally, not just in India, because even if you look at a lot of the foreign funds investment, it's actually been driven on the same kind of a sentiment. So I would tend to believe that there's a difference between how the stock market performs and how the economy performs in the short run. Though, of course, in the over a longer time horizon, things do tend to converge at some point of time. So it's not total nonsense, but then on a daily basis, or the fact that our Sensex touched 50,000 to say that, wow, we've touched this huge number, it's all because of great things happening in the economy. I think we have to be a bit guarded a bit.
Absolutely. And of course, we'll talk a lot more about it. I'm sure the budget is coming up soon. You have the economic survey, of course, linked to the budget. Anyways, we'll be discussing. And of course, the RBI interest rates policy also coming up on the annual very soon. We'll touch on these facts in our coming episodes. And of course, talk a lot more on the chapters you've covered, the topics and the themes you've covered in your fantastic book, hits and misses on the Indian banking industry. But for now, I think, Madan, thank you so much for being on the show, The Sound of Money. We continue to talk and chat a lot more on the Indian economy, and also maybe touch a little bit on overall globally how the contribution of India in years to come. For the moment, thank you so much, Madan, for joining on The Sound of Money with me, Santosh.
Thanks a lot, Santosh, for this conversation.
Sound of Money with Santosh Sirur.